Hi, Trent. How are you?
Hi, Kim. How are you?
Let everyone know who you are.
Trent Turner, branch manager, Cross Country Mortgage, NMLS 207-8583, and I am here to serve.
Awesome. So we've been doing a lot of tricky deals this summer, Trent. And we've been figuring it out. We've been plugging right along.
We don't give up.
We don't give up. We try to find a way. That's what I appreciate about you, your perseverance and your attention to detail, and just,
Likewise.
If you don't know the answer, you go find it quick, right?
Yeah, I appreciate that. Likewise. You gotta have faith sometimes.
Oh my gosh. Faith can move mountains, right?
Yeah.
We had some mountains move.
Sometimes there's a bigger power involved.
Amen to that. All right, so let's get into some of the topics that we've been dealing with this summer. Can we talk a little bit about how you as the lender work with the buyer to kind of figure out what is the best way to get them to the payment that they want? It's not always about the purchase price, but there might be some more creative ways to get them to that sweet spot.
Yeah, so that's a great question, Kim. Let's talk about what makes up your mortgage first, and we'll go into that. So you have the principal, the interest, the insurance, your property insurance, taxes, real estate taxes. All property are going to have real estate taxes, and potentially your private mortgage insurance if you're putting down less than 20%. So as your lender, we look at a couple of things. Typically, we can't adjust the real estate taxes, so that's off the board. Your mortgage rate, essentially, that's the sliding scale. Like, we can probably move that a little bit. We can move that by what you qualify for in terms of how much you're putting down, what your credit score is, or we can potentially do a buy down. It's not always a good idea to do a buy down to help you out. So essentially, we look at your purchase price. That's going to determine your principal, and we look at how can we get you a better rate on your private mortgage insurance. That's not a set number. You can get quotes on private mortgage insurance. A lot of people don't know that. You can get quotes on your property insurance. We recommend that you get a couple of quotes on your property insurance. So those are things that can help you with your payment. The other thing is, holistically, your lender may not be able to get your payment down, but can look at and see, hey, your overall, what's coming out of all of your debts, your credit cards, etc. It may be more beneficial, instead of doing a buy down, to pay down with closing cost contribution from the seller or your funds to pay down other debts. And those other debts may lower your overall DTI and may offer a better rate additionally. So there are a couple of things in there, but the two easy things we look for, we try to get you the best rate. We try to get you the best insurance quote. We work with you to refer people, or you can get your own quotes online, or if you know someone. And then we try to get you the best private mortgage insurance quote. Again, that's not, unless it's an FHA loan where it's a fixed price, that number, there are multiple companies that offer private mortgage insurance, and we like to get you the best quote possible.
That's awesome. So tell everyone the difference between private mortgage insurance and homeowners insurance.
Yep. So your homeowners insurance is basically property and casualty. In the event something happens to the house, the insurance company will make you and or the lender whole. Let's say you have a catastrophic, God forbid, tornado, fire, or even hailstorm and damages to your roof. The homeowner's insurance is going to cover the cost of repairing and bringing that house back to where it was prior to that casualty event. Your private mortgage insurance is essentially insurance that the lender is going to get paid back. And typically, private mortgage insurance is required if you put down less than 20%. Now, you can buy out private mortgage insurance. That's a conversation for a different day. But those two things, one, is to protect the home, and the other one is insurance that you're going to pay the loan back when putting down less than 20%.
Awesome. And talk about FHA. What is the rate that they use to calculate?
Yeah. So right now it's 55 basis points. So that's 0.55%.
Okay.
And that's down this year. Originally it was 85 basis points.
So I thought it was, yeah. Okay.
So that's right now, in a lot of instances, if you're bringing a smaller down payment, like less than 5% to the table, typically, not always, that private mortgage insurance differential tends to make the FHA a more affordable option. Historically, that wasn't the case, but right now, FHA rates typically are lower, the interest rate is lower, and the mortgage insurance on an FHA being a set amount, no matter what your credit is, typically, that 55 basis points is what you're paying on an annualized basis of the loan value. So it's really good for borrowers with lower credit scores. It really limits how much they'll pay for that, whereas the conventional is going to be essentially a risk assessment based on your credit score.
Awesome. So I know you talked about ways to kind of figure out where's that sweet spot for the payment. What role does down payment assistance play? And should everyone just at least ask the lender if there is a possibility they could qualify no matter what the income is? Or, what type of questions should buyers have for their lender regarding down payment assistance? Because I know every lender does not do down payment assistance.
That's a great question. Many people just assume, I make too much money for down payment assistance, or my credit is not good enough. It's not always the case. And there are really two distinct types of down payment assistance programs. There's government/municipal backed down payment assistance programs where cities and states assist with down payments. And then there are private down payment assistance programs that lenders, like internally, we offer for different programs. And oftentimes there are no income limit restrictions, meaning you can make X amount of dollars, and whereas the government programs, you can't make more than X amount. And it's just essentially, I don't want to say free money, but there are funds available to you to help with closing costs and or down payment. You should always ask. It should always be a consideration from the lender. You don't want to leave that option on the table. We want to explore everything to get you the best deal possible. And why do we want to do that? We want to do that, one, a good experience. Two, we like doing what we're doing and we like sleeping at night. And three, if we give you the best deal possible, the probability of you referring people to us really increases. So
awesome. What do you think are some things that buyers should look for in a lender? I can think of some red flags right up front, but when a buyer is looking for a lender, what should they be looking for?
I think you want to work with someone you gel with, and it's not necessarily someone you meet in person, but the ability to meet them in person is definitely a plus. To go down to their office and meet them, that's great. Someone who gives you a good vibe. What's really important is a reputable company. How much volume does that company do? What type of staffing? Are they known to get closed deals and get finance loans? And then for communication, just someone who's available to you. And we live in it's not always a phone call. Sometimes it's an email. A lot of times it's a text message. A lender that'll be available on the weekends and the evenings, because most of our clients work throughout the day, and they're calling us early in the morning, late in the evening, or on the weekends when they're out looking at properties with their realtors. So that availability, communication, and I think the reputation and the vibe are really important, because it's the biggest purchase you'll make in your life, and you want to feel comfortable and trust the person you're working with, and you want them to be relatable. I think those are important things, but just my opinion.
And I think how you start is how you finish, right? So if they're not returning your call or responding to your inquiry in the beginning, more than likely that will happen during the process. So, try to find somebody that's quick to respond, available. Not that we should be available, 24/7, because we got lives and families and all that. But just somebody that is in communication with you in some shape or form, whether it's through their, direct message or through their assistants or whatever. I think that's really important, especially when you're trying to get a deal done.
And if they're a good lender, they're doing a lot of business and they're maybe on the phone with someone else, but following up with you, or having a team and assistants that can reach out and so they can get back to you is important as well.
Yep, I agree. How can people find you, Trent?
They can contact me at 601-291-3135. That's my cell. They can find me on Instagram, Banking on Real Estate. And, they can reach out any way. They can Google me, look me up, however I'm there. Or, contact Kim. Kim knows how to get in touch with me.
Awesome. All right. Thanks for joining us. We'll talk to you soon, okay? 2023, I'll be talking to lenders, some of my vendor partners, just to give you a better idea of how the process works. So buying a home, selling a home. I think education is very important at this time to keep buyers and sellers informed about what's happening in the market. So look out for those videos. Thanks.